Welcome back to another Wealth Code video, guys. Like, subscribe, and comment if you want to see more of our great videos. Have you ever wondered why many wealthy individuals choose not to pay off their mortgages? It seems odd, right? You might assume that being rich means paying off everything immediately, including your house. But rich people see money differently. They treat cash like a game of chess. Paying off a mortgage can feel like making a big move, but they often believe it's not the best strategy for wealth building. Think of an investment like a tree. Instead of chopping it down to grab the cash now, they nurture it to grow over time, allowing it to produce more fruit, wealth, and opportunities. Rich people don't want to lose that potential growth by tying up all their funds in one asset, like a house. The key is understanding how to use debt wisely. This approach allows them to invest, grow their assets, and ultimately build even more wealth while leveraging their existing assets. Isn't that fascinating? Cash flow is crucial for rich individuals. Imagine your income as a river. If you lock up too much of it in one place, like a fully paid off house, it can run dry. Rich people prioritize having cash flow that can circulate and create more wealth. They know that the cost of borrowing money, often lower than the potential earnings they can make from investments, is worth it. By keeping their mortgage and investing the difference, they essentially channel their cash into growing assets. Think about it this way. If you can earn a 10% return on an investment, but your mortgage interest is only 4%, it's like making money on a river while paying a small toll. Keeping your mortgage allows for liquidity and the flexibility to seize new opportunities. They don't want their money trapped. They prefer it working for them, which is a fundamental aspect of wealth creation. Leverage is another powerful concept in finance. Think of it as using a long stick to lift a heavy rock. The stick is like your mortgage. By only paying part of it, rich people can use the leverage of that mortgage to buy more properties or invest in businesses. This means their potential return on investment can be much larger. By stretching their capital with a mortgage, they control more assets than they could solely with cash. When the value of these properties or investments increases, they gain exponentially. For instance, imagine buying a rental property for $200,000, paying just $40,000 out of pocket because of a mortgage. When that property increases in value, they benefit from the entire appreciation, not just their initial investment. This principle of leverage is essential for wealth accumulation and allows the wealthy to grow their fortunes much faster than if they simply paid everything in cash. Did you know that keeping a mortgage can actually provide tax benefits? It's true. In many countries, mortgage interest can be tax deductible. This means that wealthy individuals can reduce their taxable income by the amount they pay in interest. Picture a large cake and your income being the icing on it. Every dollar they pay in interest is like cutting a slice away, leaving them with less taxable income. For instance, if you owe $300,000 on a mortgage with a 5% interest rate, that's $15,000 a year in interest payments. By reducing your tax burden, it allows rich individuals to keep more money to invest. This means more funding to nurture their investments, buy other properties, or create new businesses. They understand the rules of the financial game and use them to their advantage. So by not rushing to pay off their mortgages, they're strategically aligning their finances with opportunities and tax benefits. Opportunity cost is a vital idea for the wealthy. When rich people consider paying off their mortgage, they contemplate what else they could do with that money. Imagine you have $100,000 and you can either pay off your house or invest it in starting a business or purchasing a rental property. If you pay off your mortgage, sure, you eliminate that debt. But what if that business could earn you $20,000 annually? The cost of paying off that mortgage can mean losing out on potential earnings that could significantly enhance their financial standing. So, wealthy individuals weigh their options carefully. Instead of tying down funds in their home, they prefer keeping their capital accessible. This allows them to seize higher return investments. That way, they can turn opportunities into long-term wealth instead of locking their money away in one asset. Inflation is another critical factor in why the rich don't always pay off their mortgages. When inflation rises, the value of money decreases over time. If you have a fixed-rate mortgage, you effectively repay your loan with cheaper money over time. Let's simplify this with a balloon analogy. Imagine your money is like a balloon that inflates. If your mortgage payment stays the same, but the cost of living rises, it becomes easier to pay that fixed amount in the future. In practical terms, if you owe $200,000 at a 4% interest rate, as inflation increases, that debt decreases in real value each year. Your payments remain the same, but your purchasing power increases, making it easier to handle that debt. This financial strategy allows the wealthy to benefit from low, fixed mortgage payments, while their assets appreciate, creating wealth over time. They utilize inflation to their advantage, rather than succumbing to fear of debt. Diversification is a fundamental component of smart investing. Wealthy individuals often have multiple streams of income from various sources: stocks, businesses, and real estate. Instead of paying off a mortgage and locking away their cash, they prefer to invest that money in a diverse range of assets. Picture a garden filled with different plants. If one plant's wither, others can thrive, ensuring a garden continues to bloom. Similarly, by keeping their money available to invest in a variety of assets, rich people reduce risk while still growing their wealth. For example, if they invest in stocks that perform well, it could yield higher returns than the interest on their mortgage. This strategy allows them to balance risks among multiple investments, instead of concentrating all funds in one place. This flexibility and spread not only shield against market fluctuations, but also position them for greater financial success. The wealthy often have a psychological edge when it comes to money. They understand that their mindset towards debt and wealth significantly impacts their financial outcomes. Instead of viewing a mortgage as a heavy burden, they see it as a tool. This approach can psychologically empower them, recognizing that leveraging debt strategically aligns with their financial goals. Think about it. If someone feels tied down by a debt, they'll approach it negatively. But if you can see a mortgage as a means to a profitable end, it transforms debt into an opportunity. Rich individuals cultivate a growth mindset, focusing on wealth creation instead of fearing obligations. This can lead to greater financial resilience. They're keen on finding new avenues for growth and opportunities, converting challenges into stepping stones, which is crucial for building lasting wealth. This psychological advantage helps them navigate the financial landscape with confidence and purpose. So, why do rich people rarely pay off their mortgages? It boils down to strategy. They understand that leveraging debt, maintaining cash flow, benefiting from tax savings, and embracing inflation can lead to greater wealth. These individuals view opportunities differently, managing risk through diversification and cultivating the right mindset towards money. Instead of rushing into paying off their homes, they focus on growing their assets and utilizing them efficiently. Now it's clear that a mortgage isn't merely a liability for them, it's a tool for creating wealth. As you think about your financial future, ponder these strategies. Perhaps consider not just what you owe, but how you can utilize what you have. Would you adapt these ideas in your life? Explore this mindset further. For more insights on wealth building, don't forget to like, subscribe, and hit that notification bell for our next video. For more videos from Wealth Code, don't forget to like and subscribe.